So in today's video, we'll talk about how Warren Buffett became the richest investor in the world. Without a doubt, Warren Buffett is one of the smartest businessmen on this planet. He is worth around $87 billion, which makes him the third wealthiest guy in the world after Jeff Bezos and Bill Gates. So how did he become the person he is today, and how did he become so prosperity rich? Warren Buffett actually laid his eyes at the stock market at a very young age, as early as 11 years old, when all his classmates and peers were busy playing around in the park or learning how to ride a bicycle. He started working at his father's brokerage when he was 11 years old and took over on other small jobs like helping the family business. He spent his days watching what investors were doing and listening to what they said. And by the time he was 15, he already had a net worth of $6,000, which is $53,000 in today's dollars. Regardless of his success at a very young age, he wanted to attend university, so he attended the University of Pennsylvania for a bachelor's degree. And after getting rejected by Harvard Business School, he later on continued his studies at Columbia Business School. He was Benjamin Graham's pupil, and it was through Graham's class in security analysis that Buffett learned the fundamentals of value investing. Today, Warren Buffett, where all of the stockbrokers admire, almost chose another path in his career where at the start he wanted to work at Wall Street. And it was then when Graham, his mentor, convinced him to make another career choice. Heading back to Omaha, Buffett worked as a stockbroker and created several investing partnerships. The size of the partnership grew substantially, and by the time he was 31, he was a millionaire. It was after that in 1961 where Buffett's sights turned into investing in business, and it was then where he made a profit of $1 million by investing in a windmill manufacturing company. By 1965, he took control over a textile company by buying its shares. Today, that company is famously known as Berkshire Hathaway. Today, Berkshire Hathaway Inclusive gets revenue when its railroad carries cargo, its investments pay dividends, and its companies sell electricity, diamonds, real estates, knives, encyclopedias, tools, ice creams, batteries, you name it. Warren Buffett believes the reason behind his success in the stock market and overall in capitalism is patience, being flexible and not letting opportunities slide by your hands, since they only come once. And this exact words were, long-term the stock market is going to be higher, and I have written that many times. Buffett said, in terms of what it's going to do next year or tomorrow, I have no ideas. The stocks we were buying and selling the day before the election were the same stocks we were buying and selling the day after the election. Moving forwards to 2010s, Buffett added about $12 billion to his fortune in 2016, making him the biggest gainer among wealthy individuals in the United States, according to both the Bloomberg Billionaire Index and a separate report from Forbes. However, he's not like the average businessman or the 1% where all they care about is their profit. Buffett is considered to be one of the most generous people that have ever existed on this planet. Although he didn't start donating until he got married to his first wife, Buffett is now regarded as one of the most generous philanthropists in the world, giving more than $27 billion to causes in the last decade. As mentioned above, there is no doubt Warren Buffett is a genius walking amongst us peasants in our filthy world. We do not deserve a guy as smart as him or as generous as him. The stock market is a device for transferring money from the impatient to the patient. Warren Buffett. So let us talk about the golden rules followed by Buffett. Rule number 1 was never lose money. And rule number 2 was to never forget rule number 1. Buffett personally lost about $23 billion in the financial crisis of 2008. And his company Berkshire Hathaway lost its revered AAA ratings. So how can he tell us to never lose money? He's referring to the mindset of a sensible investor. Don't be frivolous. Don't gamble. Don't go into an investment without a cavalier attitude that it's okay to lose. Be informed. Do your homework. Buffett invests only in companies he thoroughly reaches and understands. He doesn't go into an investment prepared to lose, and neither should you. Buffett believes the most important quality for an investor is temperament, not intellect. A successful investor does not focus on being with or against the crowd. The stock market will experience swings, but in good times and bad, Buffett stays focused on his goals, and so should we. This esteemed investor rarely changes his long-term investing strategy no matter what the market does. If the business does well, the stocks eventually follows. The Intelligent Investor by Benjamin Graham convinced Buffett that investing in a stock equates to owning a piece of the business. So when he searches for a stock to invest in, Buffett seeks out businesses that exhibit favorable long-term prospects. Does the company have a consistent operating history? Does it have a dominant business franchise? Is the business generating high and sustainable profit margins? If the company's share price is trading below expectations for its future growth, then it's a stock Buffett may want to own. Buffett never buys anything unless he can write down his reasons why he'll pay a specific price per share share for the particular company. Do you do the same? They don't call him the Oracle for nothing. It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. Buffett is a value investor who likes to buy quality stocks at rock bottom prices. His real goal is to build more and more operating power for Berkshire Hathaway by owning stocks that will generate solid profits and capital appreciation for years to come. When the market reeled during the 2007 to 2008 financial crisis, Buffett was stockpiling great long-term investments by investing billions in names like General Electric and Goldman Sachs. To pick stocks well, investors must set down criteria for uncovering good businesses and stick to their discipline. You might, for example, seek companies that offer a durable product or service and also have solid operating earnings and the germ for future profits. You might establish a minimum market capitalization you are willing to accept and a maximum PE ratio or debt level. Finding the right company at the right price with a margin for safety against unknown market risk is the ultimate goal. Remember, the price you pay for a stock isn't the same as the value you get. Successful investors know the difference. Our favorite holding period is forever. How long should you hold a stock? Buffett says if you don't feel comfortable owning a stock for 10 years, you shouldn't own it for 10 minutes. Even during the period he called the financial Pearl Harbor, Buffett loyally held on to the bulk of his portfolio. Unless a company has suffered a sea change in prospects such as impossible labor problems or product obsolescence, a long holding period will keep an investor from acting too human. Being too fearful or too greedy can cause investors to sell stocks at the bottom or buy at the peak and destroy portfolio appreciation for the long run. Do visit our website stockquantum.com for more information, and thank you so much for watching.